Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at the Nasdaq 100, which is the NDX. And yeah, sorry I've been away the last few days, or away from YouTube that is. I have been sick as a parrot, I'm afraid. I had a sinus infection after catching another cold and I just haven't been able to record anything. Woke up feeling a lot fresher today, feeling a lot better, so I can finally get some work out. So recording this on the Tuesday, as I speak, the market is open at the moment. It is 10 past 4 GMT. So this will be with you tomorrow, Wednesday morning, hopefully. And hopefully it's still relevant by the time you get it. Right then, we're going to start with our Elliott wave count first and then do some basic technical analysis at the end of the video. And we're here on the day time frame in arithmetic looking at the Nasdaq. So let's do a quick refresh in case you're new here. We're looking at primary wave 5. We believe we're in the primary wave 5 heading higher. Got some overhead targets we're looking to. Could potentially be closing in on our top sometime soon. I've been saying for quite a while now that I expect the markets to top out in the summer. Whether we're topping out into a significant correction or whether we're topping out into something significantly worse than even a significant correction, so a major correction, a major crash potentially, is on the cards, but we will not know what we're dealing with until we start to see it develop and look at the price action. But evidence to suggest we're going to top out in one way or another relatively soon, so that's what we're going to look at today. So that was the primary wave degree I was showing you there up until wave 5. We have our intermediate wave degree, which we've been observing as well, which takes us up to that ending 5th wave here. Now, although the 4 here the 4 does not overlap the 1, so this is a legitimate impulse wave. A while ago we were interpreting this swing as our as our wave 4, but we've ended up with a nice alternation here, having recounted over the last few weeks, where we have a zigzag in the intermediate 2 and a running flat in the intermediate 4. So a move down in an A, a B which expands beyond where the A began, and a C which concludes B4 where the A terminated. And since that point we have been working our way up in 5 minor waves of what I believe could be a contracting ending diagonal pattern, going higher, and I think we're experiencing a throw over. I say overthrow, I mean to say throw over. It doesn't really bloody matter, but there's always some nitpicky people out there who are going to have a go about it. Anyway, so I believe we might be experiencing some sort of throw over into a 5th wave. We've got a couple of targets to check. We're right at 1 now as we speak, and we've got another 1 overhead which will invalidate the count. So we'd have to change our perception of what we were looking at. I'll talk about that in a minute. So let's come down to a smaller time frame, the 1 hour, and see what we can see. So talking about this ending diagonal. Now, price action recently, over the last few weeks, last couple of months now really, has just been a pig. Yeah, a real pig to get a clear idea on, a clear count on. So what I've ended up with here is a 5th intermediate wave here, built of 5 minor waves that I am saying resemble, at least for the meantime, a contracting ending diagonal. Now, what is an ending diagonal? Well, a series of 3 wave structures which get progressively smaller than their prior. So we have this initial swing, 3 waves into an A, bum bum bum, 3 waves into a B, okay, and then we have 3 waves into a 1. So overall this is an A, B, C 3 wave swing into our 1 here. Saying this is a flat pattern because the B came down, so we can count in theory 5 waves in the C, which I think you can argue for. You can either argue for it as this 1, 2, 3, 4, 5 in the C leg of this flat pattern here. This would be a regular flat. A comes up in 3 waves, B comes back in 3 waves, does not go beyond where the A began, but completes beyond where the A finished. So A, B, C, 1. We then get a zigzag into a 2. So we have our first 2 wavelengths, the length of our 1 and the length of our 2. It's a pretty mediocre retracement, but in a it could have been It could have been a lot bigger. It came to the 38.2, could have come to the 50 or the 61.8. A deeper retracement on the 2 makes a contracting ending diagonal more likely, because it means it gives more room for the 4 to be shorter. This has resulted in a much tighter price movement overall, what we call significantly less breadth in price action, narrowing over time. So then we get a 1, 2, 3 moves ABC into the 1, we get a zigzag into a 2, which is another 3 wave move, and then we get another divisional zigzag here, A, B, C into our 3, excuse me, here, which is shorter than our 1. So the corresponding motive wave, the 1, the 3 and the 5, our 3 is shorter than our 1. So that's a good sign that we're in a contracting ending diagonal. And then we have a running flat in the minor 4. We have 3 wave swing into the A, 3 wave swing into the B, and a little 5 wave move down into the 4 when you come down to a smaller time frame here. This is another 3 wave move, and the 4 turns out to be shallower than the 2. So we have our 1, we have our 2, the 3 is then shorter than the 1 in price, the 4 is then smaller than the 2 in price, so it is still legitimately a contracting ending diagonal. We are now into the 5th final wave, which I think is dividing as a zigzag higher currently, as a 5, 3, 5, and we seem to have a 1, 2, 3, 4, 5 so far, A, B, C, and then maybe a 1, 2, 3, 4, pushing up into that 5th to find the C sometime before this white line here. Now, why is this white line significant? Let me just pop a price on it, and we will discuss. 14639.56. We are just going to write here, get a white text, ending diag invalidation. So the whole idea of a contracting ending diag is each successive wave is smaller than its counterpart, so in both motive and corrective form. So the 3 is smaller than the 1, and the 5 will be smaller than the 3, the 4 is smaller than the 2, so on and so forth, each wave getting smaller. Now if we go beyond this point, 1, 4, 6, 3, 9, 5, 6, our ending diagonal idea is wrong, because our 5th wave would be longer than our 3rd wave. We can't allow that, it has to be smaller, so we end up with a limit. So if we come up to our 3, we project from our 4, we had this running flat, remember, so the low of the 4 is not the low here, it's the low here. This puts our 100% length of wave 3 at our target, which is where I've got this white line. So that's what we're looking for. We are currently trading around another target today, which is intermediate wave 1 from 4. This is a much longer time frame target. If we just take a step back for a minute, what I'm talking about here is the length of the wave 1 here projected from the wave 4 here. Now this is a common Elliott wave target whenever we get an extension target in the wave 3, which we did. So if we come up to the 1, down to the 2, we find that the wave 3 extended and went beyond the typical target of, parity at first, 100 with the 1. We went through the 123.6, the 131.8 and the 161.8 and continued higher to find our intermediate 3, which is forming our channel. 2 and our 4 connected, this swing A here projected from our 3 to traditionally find our 5 way up here, but that might not be the case with this ending diagonal. We may be completing sooner. So yes, we got an extension in the 3, and therefore it's more likely that wave 1 and wave 5 will share some kind of parity. Now, some kind of parity is a pretty loose term, but that is the terminology essentially of Elliott. We are not talking precise measurements here, we are talking finish within the region of, and that's essentially what we're looking for. So interpret that as you wish. I interpret it as relevant until we get closer to an alternative target, would be my interpretation of it. So here we are, intermediate wave 1 from 4, got a little bit of sideways price action today. We're not flying higher, but we're not collapsing either, so we could be just sitting around this target, snagging for a bit before we push a little higher. This is at 14,518.87, so maybe we've got that overthrow idea in play. Is this the brush? Yeah, so we're doing something like this, perhaps. We wouldn't come beyond this target, otherwise our ending diagonal is wrong, but we can come just within a gnat's cock of it and then roll over. So that's a possibility. Excuse me. And this would fit the idea that I've been suggesting for a while now, that we're going to top out in the summer and we're going to have some kind of more significant correction. Okay, more significant than these recent ones. Not potentially massive, because it depends where we are in the overall count. This interpretation, if this doesn't get broken and this concludes, would have us completing at cycle wave 5 degree, primary wave 5, intermediate 5, minor 5, all the way up to cycle degree. So a big correction would be on the cards, potentially very big. Now we still have a target up here. Excuse me, I'm still recovering a little bit. At the 61.8% of primary 1 and free from 4. Now we did have an intermediate target, but we've recently smashed that and continued higher, so I've removed it from a chart. It obviously wasn't relevant. This may be relevant, it may not be. We may be heading for the top of the channel. Either way, if we don't see the market roll over prior to this ending diag invalidation, we have to consider an alternate. So that's what we're going to come over and have a look at now. So here's quite a different count of the Nasdaq. It's much more bullish than what we've been looking at. I call it the Uber Ball count for our members on the Discord, and it's the idea that, you know, this can go on for years yet, well, months and months yet at least, potentially longer, but it could go on for months yet before it tops out, and could take prices up above 16,000 potentially. And this is the idea that our count, instead of this pivot here being a 3-4, or this being a 3-4, and then this being a 1, 2, 3, 4, 5, and then breaking down, we're suggesting that this pivot isn't a 3-4, it's a 1-2, which jigs the entire count. Why does TradingView keep moving my bloody numbers about? Anyway, so this would be a 1-2, and we haven't even put in a 3-4 at primary degree yet, this is suggesting. If we just take our pitchfork to justify this, you can see how our initial move up into our primary 1, into our 2, we're then projecting a pitchfork to find our primary 3. And you can see that all subsequent price data, our zigzag 2, our running flat 4, has all been contained neatly inside of this pitchfork, and therefore I'm suggesting that if this count is correct, we will continue to head higher to find that wave 3. So if we just hide this again, bear with me. Right, so this count's slightly different. It's not as detailed, I'm still working on it. It's an alternative where we have the price going higher, and instead of counting this as an ending diagonal, I'm looking at this as, it could be 3-4 here, right? It could be a leading diagonal, right? Possibly. It could even be the same ending diagonal idea into a 5, but instead of a 5 of a 5 of a 5, into a 5 of a 5 of a 3, possibly. And then down into a 4, and then up into a 5 of a 5. That's possible. It's also possible the 3 is going to go higher, and this is some kind of ending diag. Well, they wouldn't work, would it? We'd have to abandon the ending diag idea at that point and suggest that this is actually an impulse, and that we're coming up 1, 2, and then 1, 2, 3, 4, 5 into a 3, into a 4, into a 5. Difficulty with this is we have to change the initial count, right? So if we just come down to 1 hour, I'll show you what I mean. Like, how can you have an impulse, Tom, where you've drawn a diagonal on another chart? And the reason is, right, so on my other chart I'm saying 1, 2, 3, 1, 2, 3 and 5 for a 3 wave move into a 1. Right. On this I've had to jig it differently. I've had to have a truncated move down here to complete the 4, not here like we have on the other chart, on the low of the 13th of May, but a 5th wave truncation finishing slightly higher in this 5 wave move down here, right? Completing the 4, and therefore I can get a count into a 1 as an impulse wave. So instead of using this as a 3 wave pivot, I've moved the low across to a truncation, and I've counted this as an impulse. 1, 2, 3, 4, 5 like that, zigzag into the 2, and now we can dig out an impulse in here. You can go 1, 2, bum, 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 bum. It's a bit tricky. 3, 4, 5, 1, 2, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5, 3, so on and so forth. So we could be looking at a wave 3 extension, right? Bloody thing. So, excuse me, could be looking at a 3-wave extension where we've gone 1, 2, 3, 4, 5, 1, 2, 1, 2, and then 5 more waves up into a 3, and then we get our 4, and then we get our 5 nearer the top of this channel to much higher targets. Okay, and then that potentially, this could still be the 5 up here, right? I've rejigged the whole count because I wanted a real alternate idea, which suggested a much more bullish alternate. But the reason I've done that is because we can easily accommodate this if we want to onto this chart. If this ending diag idea breaks, we can move everything across and adjust for a 5th wave completion here. And then we've still got the option of a 3rd wave completion and the bull market just lasting way longer, and just keeping everybody, you know, waiting for the inevitable. Alright then, so I'm going to leave the Elliott wave count there. We're just going to save these before TradingView starts moving all my numbers all over the place. And now we're going to do some basic analysis to wrap up the video. So first thing we're going to do is hide the count. We're going to bring up our exponential moving averages, 10 in yellow, 20 in blue, 60 in orange, 250 in green. We're going to come out to the weekly time frame and bring up our momentum indicators. Alter the chart. Right then. Let's just zoom in on more recent price action. Hide the favourites bar for a minute, we don't need it. So on the weekly time frame, what can we see here? Above the 10, above the 20, above the 60, above the 250. No, whatever this correction, this bear market here, this temporary bear market, a small degree for the coronavirus crash, took us below the 60. There's been no subsequent related wave degree event to whatever this wave degree was, which I was saying was cyclical, 3 into a 4, and now we're into another cyclical 5th wave. There's been no subsequent correction of equal size, of equal depth, of equal scale. We've remained above the 20 exponential moving average ever since. We've wicked through it a couple of times, but we've remained above it. So whatever this was will have its counterpart up here at some point. Could be now, could be in a few months, but we'll have the counterpart of this correction, and if it's completing a larger degree, then it will be even bigger. And we may even come back to the 250 at some point, so, or even deeper, who knows, but a significant sell-off will come. Alright, so above the 10, above the 20, above the 60, above the 250, no sign of breaking down yet. Price action is looking bullish. 1, 2, 3, 4, 5, 6, 7 green weeks in a row so far. If we were to finish this progress of 7 green weeks in a row, I think it would be a record in the move, at least since the move up from the March low. I don't think we've seen 7 successive weekly green candles at all, or even gotten close to it. 1, 2, 3, 4. 1, 2, 3, 4. Nope, this would be incredibly bullish. So yeah, we are stretching things, there's no doubt about that. Getting back up into overbought territory on the weekly time frame here on the RSI. Just a quick, in case you're new here, the RSI is set to a 10 close with a green 30 level representing oversold and the red 70 level representing overbought. We also have a MACD with a 10 for the short term moving average in blue and a 20 for the long term moving average in orange. So getting back up into overbought. No divergence, bearish divergence in the short term here, having set this new overbought condition. Still have divergence between the high here of the 24th of August, and that we have not come to oversold since. So this high, if it does turn out to be lower after these 7 green candles and we roll over, we will still have a bearish divergence over the long term, going back from August last year to roughly July, August this year. So about a year. And then that divergence is much more pronounced on the MACD here. As you can see, we have the high here in August, we have a subsequent lower high here, and it's highly likely we are in the process of setting yet another subsequent lower high. So bearish divergence in the MACD, higher highs in price, lower highs in momentum. Short-term moving average is crossed back over the long-term moving average, and we've got some green bars building on the histogram here, which isn't that impressive looking considering just how strong the price action has been. Let's come down to a day time frame and see how it looks. So still above the 10, 20, 60, 250 shorter term moving averages, accelerating away from the longer term moving averages, looking very, very bullish. Into overbought territory here on the RSI. The same divergence exists on the daily time frame on the long term as it does on the weekly time frame. Still does between this high, and any subsequent high we were to set soon before taking out the MACD high back in April. So there is still bearish divergence here. It's not as strong as it has been previously to this price action, but it's still present. So it does feel, with how much we've stretched things lately, 7 green weeks in a row would be running if we close this week green. Move back into overbought, divergence is present, a potential completed ending diagonal count is in play, coming up to 2 significant targets over both intermediate and shorter time frames. It's all there, guys. It's all there to get a reversal, to get a turn down, but until it happens, it isn't happening. And until it happens, we can't look at it and can't judge what's happening, really. We would like to see some kind of weekly bearish candle, or maybe by the time we complete the day, the week, looking at the day candles, we'd like to see perhaps a shooting star followed by bearish engulfing, whatever. Abandoned baby, we'll have to wait and see what we get. If we get some kind of bearish candle set up and our Elliott wave count supports it and our momentum turns negative and we get those 5 waves down, we'll be looking for 3 waves back and we'll be looking to short, but we're not going to do it until we see it, because trying to call a top, and people say you shouldn't catch falling knives. I think in what has been a cyclical, super cyclical, grand super cycle bull market lasting over 100 years, catching falling knives hasn't really proven to be an issue for those who've wanted to be long in the stock market. But trying to sit on top of a taking off rocket and shorting it before it's time to do it, that's murder. So I have been trading for years. I've been there. I've done it. I know it's murder. So having learnt from those lessons, we will wait to see the market reverse before we make any brave calls. But we can look at what's been going on and at least make a relatively vague call that it's coming. It's coming sometime soon, and it's going to be pretty big when it arrives. But let's not jump the gun. Alright then, guys, I hope you've enjoyed this technical analysis of the Nasdaq. If you're new to the channel and you have liked what you've seen, please smash the like, subscribe, hit the little bell notification icon button to remain informed of future video releases. Leave us a comment in the comment section below if you want to. And as always, thank you so much to my patrons. Your support is greatly appreciated. If you're interested in becoming a patron, there's a link in the description box below, but for God's sake, just leave it until the 1st of July now, as I'd hate for you to get charged for this month, June, with only a day or 2 left, and then July straight after. So if you are interested, go over, have a look at the tiers, see if there's anything you're interested in, pick the one that suits you. If you are interested in value investing, dividend investing, we've got 20 plus stocks on the stock rating system this coming up in July, 16 or so ex-dividends coming up. So mostly European and UK stocks, because it's July. You know, we'll be waiting till the back end of summer to get the quarterlies for the US again. But anyway, besides the point, if you're interested, go and have a look. Also, if you're not following me on Twitter yet, there's a link to my Twitter feed in the description box below also, so go over and follow me. Alright guys, take care of yourselves, and I will try and get a video out for Thursday and for Friday and for Saturday as well, as I'm trying to catch up, as I have neglected you guys a bit. So all the best, bye bye.